All right, welcome to The Explainer. Today we're grabbing a snapshot of the global market. And what we're seeing, well, it's not a clear-cut bull or bear market, it's this really fascinating tug-of-war. So let's dig in and see which side is pulling ahead.
So if you were to just ask me, hey, is the market having a good day or a bad day? The honest answer would be, well, it's pretty complicated. On any given day, different parts of the economy are telling completely different stories. And today, August 11th, 2025, is a perfect example of that.
And look, this isn't just a feeling I have, it's right there in the analysis. Investors are, and I'm quoting here, navigating a mixed financial landscape. What that really means is, while some assets are climbing, others are falling. While some industries are doing great, others are hitting some serious headwinds. It's kind of like a big puzzle, and we're going to try and piece it together.
First up, let's talk about the market's mixed signals. We're going to look at the conflicting stories being told by some of the most fundamental assets out there. This brings us to our first battleground, hard assets. We're seeing this incredible tug-of-war between energy and what we call safe haven metals, and it tells you a lot about what investors are thinking right now.
So pulling on one side of the rope is oil. You can see both the international and the US prices are sitting there in the mid-60s. They're being kept in check. And why is that? Well, it's a mix of things, but a big one is that there's just ample global supply according to the World Bank.
But pulling hard in the other direction? Gold. I mean, look at that price, almost $3,400 an ounce. That tells a totally different and really powerful story. This is gold doing what it does best, acting as the ultimate safe haven asset. When investors get nervous about where the economy is headed, they buy gold, and that drives the price way up. We're literally seeing that flight to safety happen in real time.
And it's not just gold, silver is also holding firm, which just reinforces that trend. So you have these two totally opposing forces, right? Ample oil supply suggesting economic calm, and soaring precious metals signaling anxiety. That, right there, is the tug-of-war in action.
Okay, next, let's look at money and bonds. People often call this the smart money market, and right now, it's signaling a pretty subtle but important shift in mood.
A key signal is coming from the 10-year U.S. Treasury note. Now, this is a benchmark for global borrowing costs. As you can see, its yield saw a notable increase. So what does that really mean? It means investors are starting to demand a higher return for loaning out their money. It's a hint that they're changing their expectations about future inflation and growth. Even the currency market reflects this tension. The euro is holding steady at about 1.17 against the US dollar. You can think of this rate kind of like a scoreboard in the tug-of-war between whole economies, constantly shifting based on where investors see more strength or stability. All right, now let's get a little more granular and pull up a sector scorecard. This is where the splits in the economy become crystal clear.
And the divergence here is pretty stark. You've got the pharma sector, for example, showing real strength, with companies like Eli Lilly posting great earnings. But then you look over at the housing sector and it's in a period of adjustment, really struggling with rising costs and project delays. And then there's tech. It's a mixed bag today, but it's fueled by all this long-term optimism about AI, which is giving a boost to giants like NVIDIA and Microsoft. I mean, three sectors, three completely different stories.
So what should we watch next? With a pretty quiet day for any major economic data releases, the market's attention is turning to find clues somewhere else. And today, a big source for those clues is individual company earnings. We have a whole slate of companies reporting, from a gold miner like Barrick Gold to a tech firm like Monday.com, and even Sphere Entertainment. Each one of these reports is like a small piece of the puzzle, giving us a real-time health check on specific businesses and their industries.
But all these individual earnings, they're really just the warm-up act. The real main event is coming later this week. That's when we get key reports on inflation and retail sales. This data could be the tiebreaker we're looking for, giving us the clearest picture yet of which side of this economic tug-of-war is actually winning.
And that leaves us with the big question, doesn't it? With that crucial inflation data coming, which side of this market tug-of-war is going to win out? Will the data show an economy strong enough for growth, giving the bulls the edge, or will stubborn inflation give the upper hand to the safe haven crowd and more cautious investors? The rope is tight, and this week, we might just see a winner. Thanks for joining The Explainer.